many of these new neobanks, it's just a crypto wallet with a card that accepts transferring stablecoins or sending the stablecoins to the Visa, and Visa is the one doing the exchange. The economic value created through blockchain technology has always been the right patch for the failing economy, a failing financial system. Money is there, but banks have experienced this rejection of central bank, and they're looking for an alternative. Interact with money. You don't need banks anymore with blockchain technology. That's the infrastructure I see.
Today's guest is Ariel Eiberman, LATAM Director at Gnosis Pay, where he is working on bringing stablecoins into real-world payments and building what could become the foundation of on-chain banking. In this episode, we break down how stablecoins work in places like Argentina, how self-custodial wallets connect to global payment rails like Visa, and why most crypto payment solutions fail when they meet real-world constraints. We also unpack the hidden operational and geopolitical realities behind adoption, what institutions still misunderstand about building usable financial infrastructure, and what happens when AI agents start transacting in a world where banking is fully on chain. Ariel, welcome to the show.
Hey, thank you, Nasib. I think there was a very high expectation settings in that intro. Well, let's try to find some of the takes that I can bring to the conversation.
Okay, and so I always begin with the guest background. So could you please elaborate more on your backgrounds and because my impression is that you've been deeply focused on payment stablecoins and user experience in Latin America, right? So what led you into this space and what made you focus specifically on real world usage rather than purely crypto native products?
Well, yeah, my career has been a very eclectic. Like I used to organize Olympic Games in the accreditation side and the management of sport delegations, but I started doing events in software and then changed into the industry of Web3 and blockchain because I've been like a an advocate of blockchain payments and banking since the early days of Bitcoin when you could only transact Bitcoin to Bitcoin P2P. I didn't have a bank account 2013, and when I wanted to travel and I wanted to find ways of getting paid in a tourism industry that I used to have walking tours, the client always wanted to transfer me money, but I didn't have a bank account. So I ended up looking into Bitcoin and saying like, okay, can send me Bitcoin instead. And it was like kind of my Bitcoin was my bank at that time. Whether it is was a paper wallet or sometimes I used to have a centralized exchange as the wallet, and then I used to have as well like local bitcoins, the escrow it's not a smart contract, but the escrow system for peer-to-peer exchange. So that's was the reason why I started doing blockchain, because it was banking me when the other banks were asking for too many stuff that I didn't have because I was an employee, I was an entrepreneur that I just wanted to you know be like live and be able to pay for stuff without having to go through the hurdles of getting to the bank, to the banking system. And fast forward in 2022, I moved from a WhatsApp related business to a smart contract wallet, which is called Sequence, has been acquired by Polygon in the recent months. And that was like I started to work for the industry itself, trying to bring more clarity on the messaging, because I'm a marketing as a background, a marketer. So trying to bring more clarity and help business people and also users to learn how to interact and how to use it. So I always had a very practical approach to everything in crypto. It's like you can tell me whatever you want about capital markets, buying stable coins and getting UST, the bonds, like in and all the cross-border movement that stablecoins are doing, but I'm practical. It's like, can I click? Can I use it? And that has led me into the payment side of stablecoins today, where I'm leading the expansion for Gnosis Pay, which is an API for issuing Visa cards that are funded in stablecoins. And that also opens the conversation for banking in general. It's like, can banking exist on blockchain technology? Does it exist partially, or can it exist in totally, like complete blockchain tool? And this is where I am. I'm not an expert in payments. I'm not an expert in banking. I'm just Like I am humble enough to say like I'm a user who is motivated to make on-chain banking services exist in the real world.
And that's an important perspective, right? To think in user terms. So at Gnosis Pay, you are integrating stablecoins with Visa, as mentioned, with Visa rails and self-custodial wallets. What were the hardest constraints, technical or regulatory, in making these systems interoperable?
Well, the thing here is always the blocker is on the Visa's, bottleneck, because Visa is accepting a new payment method that they're not used to it. So trying to engage with all the legacy and complexity that Visa brings to any business is just like a big hurdle. And it's a big hurdle for Gnosis Pay, and it's been a hurdle for everybody trying to do anything with Visa or MasterCard or any other network of payments. And I think on the technical level, Gnosis Pay has been a pioneer 2 years and a half ago, launching the first consumer card on Visa, and has made a very good work on translating the standards of communication of the Visa networks into the blockchain. So now what you do with the Visa cards powered by Gnosis Pay is like each transaction in the card is actually a blockchain transaction being recorded. And this is not it's something that it happens everywhere. Somebody would expect that it's a yes, but usually it's usually obfuscated by different main wallet providers that when you pay with a Visa card, actually it's somebody else paying for you, but after it settles with Visa in another way. And your wallet balance will change, but only in the interface, because the blockchain remains the same, right? And then the discussion about self-custody and the discussion about who owns the tokens at that moment, it really changes. And that's another conversation if you want to have it. It's about self-custody. But I think the technical hurdles have been getting smaller as time advances, and developers are getting, like product uh, the, the product differentiation always drops down when there's a new development, because engineers are smart enough to reverse engineer everything other people do. And the regulatory side of you know trying to engage stablecoins with Visa has been getting better, because Visa established a team for digital assets and a team for stablecoins, and so has been some other banking layers doing that. So it's improving. It's still quite cumbersome, as it requires multiple touch points in a long period of time of 6 to 12 months to do anything on that side. It's improving though. Like before it was years, now it's months, maybe in the
Yeah.
future will be weeks.
From a product perspective, how's on-chain banking different from simply using a crypto wallet with a card attached?
Well, it depends on how you define on-chain banking, I would say. Many of these new neobanks will be exactly that, what you mentioned. It's just a crypto wallet with a card that accepts transferring stablecoins and selling to fiat to pay for the car,
Yeah.
or sending the stablecoins to the Visa, and Visa is the one doing the exchange, the off ramp of the stablecoin. So it really depends on what you call the on-chain banking. I see it more in a visionary way of on-chain banking as, first of all, a mirror of today's banking services, from a savings and checkings account with a card, with a debit card, with a credit card, a banking service that can give you loans on on the different um, products they have. Today we can see in Web3 that exists the collateralized loans, meaning like you deposit some asset that has value, and you can get uh, like a you can borrow money from that value with a smaller percentage. Like if you deposit $100, you can get up to $80 uh, in a loan. But also in banking would mean to mirror what happens today in the banking world. It's like, well, you get credit just because we know who you are, right? Like the bank accepts some risks and saying, okay, will you get a credit card and we'll give you credit that you can spend. You need to repay it in 30 days. or we'll give you a loan. You want to buy a house, you can have to give us all of these different collaterals or and confirmations, and we'll give you some credit with specific interest. And banking as well in Argentina, they offer insurance, for your car, for your apartment, for your
Mhm,
for your cell phone as well, which is funny,
mhm,
but they do offer that. And there's many other like products that banking offers today that the on-chain banking mirror, like the alternative to it, could also offer. But so far it's been so new to this. Like if you really look into these neobanks, on-chain banks today, they actually a crypto wallet with a card.
mhm. And what separates markets where stablecoins become infrastructure from those where they remain speculative tools? Maybe we could draw some parallels with LATAM.
Hmm. Look, I think the stablecoins are nowhere near infrastructure anywhere in the world, as
Mhm,
fiat has like
mhm,
more than 98% or even more, 99% of all the volume in each of the countries. The conversation about being an infrastructure is when the fiat infrastructure fails. And that's where crypto has
mhm,
always shined. Like
mhm,
blockchain technology and that is created, the economic value created through blockchain technology has always been the right patch for a failing economy, a failing financial system. So now, if you talk about infrastructure, you can look at Bolivia example, where the central bank had no more dollars in their deposits, right? So when any company or individual wanted to buy something in dollars, the bank will always reject the transaction, and no
mhm,
banks were allowed to transact in dollars without going through the central bank approval. And for a period of time, the answer was always no. Now it has been a year. Now it's a little bit more flexible. Now you have people can spend up to $200 or maybe $1,000, and money is there. But banks have experienced this rejection of central bank, and they're looking for an alternative. And like maybe 50 years ago or 30 years ago, you think like, okay, what's the alternative to currency, to money? It's like there's no alternative. It's like the other alternative is like, well, Ecuador went through a period of dollarization, so they lost their local currency, and now everything's in United States dollars in Ecuador, right? You have also another hybrid approach where Panama, because it had so much influx of US dollar through the canal, that now you transact in dollars. They still have their Balboa currency, but the bills that you use, it's all dollar denominations. It's like all dollars, okay? Like printed by the mint in the United States, with the exception of the coins that could be like mint in the central bank or the mint of Panama. So when do stablecoins become infrastructure? Is in when the system fails. So banks in Bolivia now are looking into integrating stablecoins to offer stablecoin dollars, because that's the demand they receive, to the users. Central bank says no to fiat dollars, and they look at Tether. They're like, hey Tether, do you have some dollars? And yeah, sure. Like they want to power all banks in Bolivia with USDT.
Does it make a lot of sense? Because if they reject US dollar, there is a reason for that, right? But then there is Tether, which is basically it's not replicating US dollar because there are different underlying reserve mechanisms and reserves in themselves, right? But it's all connected to dollar and the systems around it. So do you think that that makes sense, or is it just necessary at this point? It's just necessary to switch to the stable coins, and there is no better alternative
Mm.
anyways.
We live in a moment in the world where technology has become part of our life, and blockchain technology has allowed money to be technology, right?
Mhm.
Money to be code, money to be programmable. So it makes sense that everybody transacting with money will also have a parallel route where they have stablecoins or tokens in blockchain that represents money. Okay. So both things need to happen at the same time. We can't talk about one being better than the other one. In some
Mm.
cases, one will be better than one. In the other cases, it will be the opposite. Sometimes rails between US dollar and euro, that conversion, that affects it's very well already oiled, right? Even if you have to do a Swift transfer, yes, it takes a few days and, like it has some costs and you can improve that. And even Swift, the agreement of Swift have already been experimenting with stablecoins. But even there, it's not going to be a huge difference of how operationally works. But in some of the rails, when you want to transact, Brazilian real to Japanese yuan, it's like that is not made well. It's like the fiat goes to the US and then US from to Japan, and whatever time it takes there and whatever um, time and cost and like regulatory checks that it gets, it makes it something much more easier just to put like a stablecoin of real to a stablecoin of Japanese yuan and put it together in a liquidity pool and let the market arbitrage.
Let's stop for a minute. Here's a brief moment of context for those who may not know me. My name is Nasib Fathi. I'm a scientific researcher in the blockchain space, and I work with executives and organizations as a growth and media professional. My focus is crypto at the intersection of institutional finance, market structure, and regulation. You are watching the NFK podcast, where these topics are discussed through conversations with people shaping the development of digital assets space. Gnosis Pay enables users to spend directly from self-custodial wallets via a card, right? What needs to happen for this model to scale globally and compete with traditional bank-issued cards?
In order to a self-custodial wallet to be able to spend with the card to scale globally versus the option today of users just having a bank account with a card that can spend, it's about the licensing, right? Because when you have a bank licensing a card, it's a card from your probably place of residence. And what we're used to here in blockchain is like everything is global, but payments is not global. Like the payment industry is very local. So what we're seeing today is these licenses of cards that allows you to do, like cross-border programs. So you can issue like a European card to somebody in Argentina, or you can have a Puerto Rico licensed card issued to somebody in Kenya. Okay. And usually in the banking system, it's like, no, if you are in Puerto Rico, you get a Puerto Rico card. If you are in Argentina, you get an Argentina license card. If you are in Kenya, you get a Kenya license card. So in order this to scale, the whole Visa infrastructure that have built for many, many years needs to completely change. In order for cards to be global cards, there needs to Visa and the other card networks needs to change the way they do things. Instead of doing separate entities in each country that gets their revenue from the spending of their shops, they need to completely change their ways, right? Um,
Mhm.
Difficult to ask, right? To them, they're like they're slowly integrating accepting stablecoins as a settlement. So for my other part of the answer to exist, uh, wait sitting, right? Because it's not going to happen this or the couple of next years. At the same time, there are other builders and creators of what would it mean to have a stablecoin card network. So it's not going to be in Visa. It's not going to be on MasterCard. It's not going to be in American Express. It's going to be a native Web3 card network. So there's a couple of people trying to build that. One that it has been very much in the news headline. It's called Colossus, and Colossus is trying to do a P2P card network where you pay you as a P2P,
Mhm.
like a person to the shop immediately. There's no Visa in the middle. It's just like a smart account that accepts the message signed by the card, that takes the money from your wallet and deposits in the other person's wallet, whether that's an individual or that's a shop, a merchant, like a company.
Mhm.
That it's what's being created. The difficulty there is like, well, that needs to work everywhere in the world. Visa and Mastercard have been investing millions and millions of dollars in 50 years to be globally acceptable. So the hurdle will be more distribution. Is like how this new stablecoin native card network can be integrated in everybody's pocket and in everybody's shops without having to spend another 25 years and like $250 million in marketing.
Mhm. Everyone says payments when talking about stablecoin adoption, but which specific payment flows are actually scaling today? We have payroll, B2B settlement, remittances, treasury, routing, and so on. And which ones are still mostly narrative?
All of them are mostly narrative, to be honest. Payroll, remittance, vaults. Did you mention another one? They're all narratives in crypto. You know, that everybody was trying to catch the next big thing. What has been proven at least have a market fit is remittance, moving money from one country to another one. If they can also, if the fiat money can stay in the same country without having to use correspondent banking in order to move it to the different places, and they just like can buy and sell stable coins in each side and doing the sandwich that it's called, like buying in a stablecoin with one currency, transforming that currency to the other stablecoin, and downloading that into the next, like off ramping that into the next country. That is actually like very well used, and this is why you see um, PayPal and World Western Union, you know,
Mm.
and so many others trying to engage in that cross-border remittance. That works because also at the consumer level, consumers really are very sensitive to fees. So now
Mm.
fees are high for remittance, and stablecoin sandwich can actually like reduce it very, 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 very little. There's no business, right? It's just like you do it because you want the volume to transact, but actually there's no business in remittance there if you want to move money in stablecoins. The amount of basis points that you can do for that, it's very little. There's no enough room for businesses like Western Union to be born again, right? Like Western Union needs to adapt. But then payroll has been uh, useful and has market fit in a very specific segment of people, which is like freelancers or foreign
Mhm.
contractors in Latin America. There's a bunch working for US companies or European companies. Same thing in Africa or in Asia. They work for these American or European companies that they pay. It's a very well known north to south hiring. And there's been in the last 15 years some solutions of payroll that are compliant and that help these companies in the United States and Europe to be able to pay foreign contractors in a way that makes sense without a lot of legal burden. And now come stablecoins to do the same thing they were doing with fiat, with high fees for the company
Mm.
to offer the same thing, but the company now is paying much less and faster, and you get the money faster. So if you use Deal, DEEL, in the past, the company will pay, and in 3 days, 2 3 days, depending on where you are, you'll get paid. But
Mhm.
when you do the same thing with the payroll with stable coins, when they pay, just like blink and you'll have the money, right? So these things have a lot of market fit. I wouldn't dare to say like they're scaling globally because it's a very small niche market, which is freelancers in the south working for companies in the north.
Mhm.
And then Nasib, coming out to payments again, stablecoin payments, is there's most of the stablecoins today are US dollar pegged stablecoins. The only place where people use dollars to pay for stuff is in the United States. Like in Argentina, in other countries, through stablecoins, people could pay in dollars, but they don't. It's not a routine. It's like people won't change their habits because now you have a easier to access dollar and you have the app that translate that dollar into the wallet of the merchant or off ramps it to the merchant in their local currency. People will still keep their local habits. I would imagine a place where stablecoin can make also a big difference, and it's slowly finding market fit is in the uh, world trade, right? So exports and imports. Now that when an Argentine exporter needs to buy something from China to be sent, until the payment hits the bank of the Chinese manufacturer, or it won't release the ship or the container into the ship at the port. And those 5 days is 5 days less that there's no they don't have the money to operate, and they're just waiting, right? Like waiting on money to move. And that's crazy to say now that if you're involved in stablecoins, waiting for money to move, it's like a sin, right? Now these companies are able to pay to their Chinese counterpart in a matter of seconds or minutes, right? And then the container is dropped at port and can be shipped.
You mentioned foreign trade, right, for exports, imports, and so on. So, but if those stablecoins to continue to absorb dollar demand, for example, globally, do you expect governments to integrate them into their financial systems or actively suppress them to protect monetary sovereignty? And what signals are you already seeing on the ground?
I'm not very much interested in the topic of how governments relate to stablecoins for their treasury or for their legal entity. Like at the end of the day, people will transact with that, and if it's enough volume, regulators will like to put a room to it, right? And so like, okay, is this safe for the consumers? If not, let's bind it and let's really like compress the who can do it. And then it's like, yes, if it's safe and it's already been used in all of these countries, and the United States have like issue like the Genius Act and the Stable Act, etc. It's like, okay, it's safer, so let's just like keep an eye on them, right? Like keep an eye on how you can actually offer this product to the consumers. But about dollar hegemony, I believe it's a conversation I'm not following. I think the dollar hegemony has been here for since the last maybe 60 or 70 years after the Second World War, and it will stay here unless there's a bigger power trying to push their currency, right? And I don't know. I always lived in this US dollar denominated world where everything that it touches two countries has to be global. I think in some rails it won't matter as much. Like in Latin America, we have uh, like we have like a conglomerate of countries that agree on different um, commercial agreements. That's called
Mhm.
Mercosur, and Mercosur could actually not depend on dollar to transact. I don't if I need to buy something or sell something to Brazil or to Paraguay or to Peru. I don't need to acquire dollars to buy or to sell that thing. So far, it seems like you need to, right? In the fiat world, but with stablecoins, it will disrupt a bit of that. But when you're a Brazilian and you're transacting in a country like Argentina, where the peso will devaluate 35% in a good year of price, also you don't want to have touching peso. So maybe you do prefer some of the safety net that dollar has. But again, with stablecoins, you don't need to be sitting on money. You can always have money being working, no, like a working capital. You can always have stablecoin working while you don't use it. So I think this will change stuff. But world hegemony, I think it doesn't depend on the technology. It depends more on like the powers of these countries and how do they struggle together.
If AI agents start controlling capital at scale, do you think humans will still be the primary economic actors? Or does crypto infrastructure risk becoming a machine to machine financial system that sidelines users entirely?
Oh, I have no idea. If AI agents will create value out of money by themselves without asking the humans to create value, I have a very like a, a more narrow view on this. I know that value is created by humans and by the products it develops and the distribution it does and the relationship it creates. That's the value that uh, humans create and they sell, and the gross and they how do you call it, the gross
Gross
profit.
domestic product. Gross
Yeah,
domestic
sorry.
product, right?
Yeah,
GDP,
yeah,
right?
yeah,
Yeah.
yeah. The It's also created by these companies of humans, not only machines. If machines only touch money to move and to farm yield in the different places, it will continue to do that. Meanwhile, the governments continue to inflate and print money. But once that stops, there's only a zero sum there of money. You can create money out of thin air just because you create money out of thin air without that collapsing. So again, I have a narrow view. I don't see, like, I see agents as an extra product, as a more a layer where they can operate easier with all of these things, and it could be the ones who use it more efficient in so many different ways. But I don't see how that will create a new economy that will transact with itself without human intervention, creating value, right? For sure, they can do it without human intervention once it's deployed. But it's like, how will we create value itself in a zero sum game? Like,
Well, I believe that at some point they can create companies and they can operate them and so on. Why not? Especially when placed at the robots, and then then they can also interact with human beings in a more relatable, at least visually way, and then possibly in the world where which Elon Musk described recently as the world where there are more robots than human beings, that possibly could happen. I know it sounds like a fantasy now, but back in the days we were thinking about AI as some sort of a fantasy. So even if it's in its infancy, in its current form,
well,
right? So
they-
yeah.
also Elon Musk called robots not only hardware robots, also calls agent robots, and you can
Mhm.
deploy agents as mosquitoes, right? Like, for sure, you can have more agents than humans.
Yeah,
No,
yeah, why not? Yeah, yeah. It really depends on the on the how you formulate this. Anyways, so regarding the industry, there is a growing narrative that crypto is becoming financial infrastructure, and there is this narrative that is here for quite some time. But most users still rely on centralized rails at critical points, and I think we mentioned that already here. So where is the industry overstating progress versus what is actually true in production systems? Maybe you could also give some, we could add some context in the form of LATAM, right? Yeah.
when I hear people talking about blockchain being the infrastructure of financial systems, what I hear is the financial system is using blockchain technology to
Mhm.
continue doing what they do. So it's
Mhm.
like the same way they took internet and to continue providing the products they have. They created a few more products that are digital now, but like, if you went to a bank, shop, to a bank store, I don't know, maybe 50 years ago, you wouldn't have such a big different experience of what it is today, right? You still have kind of the same products, kind of the same relation with money, and how do they custody your money, your funds. I believe, like, the biggest differentiation of what blockchain can enable that can become financial infrastructure, it's self custody, and this is a very personal view on things. I think, like, blockchain technology allows banks to spin up easily with the tools provided by so far, for ramps, for wallet custodial, and for the signature of this wallet, for cards that can be attached to your wallet, um, you know real-time payment solutions that you can scan and you can pay in different countries, in different rails. I think what the financial infrastructure of blockchain means, that you don't have to rely on banking companies to bank, to do the bank as a verb, right? To be able to interact with money, you don't need banks anymore. with blockchain technology. That's the infrastructure I see. But when you look at the stages and when you look at the headlines of financial infrastructure, what they usually mean is like there's a new bank that have now is teasing with the idea, entertaining the idea of using these tokens.
If we fast forward 5 years, what does everyday financial life look like in markets like Latin America if on-chain banking succeeds?
I think your question on how we can change in 5 years, I would like to think I would imagine like it won't change much because of all the regulation trying to trap these things and it doesn't move us as fast. Governments here change every 4 years, so I would imagine the next government change for good and for worse, it won't be drastically different on the way they incorporate stablecoins and on-chain products in daily life. So like in 5 years, I would imagine not much would change. But touching base with the question on AI agents that you've done, I believe like in the realm of agent commerce and how to interact with online commerce, it might look very different. It might look in a more optimistic way, easier to transact. The agent will always choose to pay in stable coins because it's the most efficient and it's like something that has more control of it. So maybe on-chain banking will continue to steer where it's allowed. Like on agent commerce. You could see a lot of adoption on that side in 5 years. And then whenever the system breaks down, whenever the financial system breaks down. So as we've seen with a lot of sadness, the surge of wars and battles in different cities across the world, crypto will run there, right? Like when banks can't issue money, when banks can't give you a card, crypto will give you card. And when I say crypto, I mean on-chain banking. Like for those who are displaced from their homes, they still have a internet connection. They will be able to create a wallet. They will be able to receive funds, and they will be able to like request a card attached to it, and off they go, right? They continue with their lives. They continue wherever they are. When the banking system and the financial system breaks, blockchain technology remains.
Where is the best place for listeners to find you and follow Gnosis Pay's work?
The best way is just having a coffee with me in Buenos Aires. Just write to me and we'll have a cup of coffee or an ice cream, and we discuss these things. I'm usually try to be very active in LinkedIn, Twitter. Now fantasizing a little bit of what type of content should I do in TikTok or back in Facebook to see if there's still people over there. But Twitter and LinkedIn through my name that you can see written here, you can probably find me ranting about a product that doesn't work the way I expected, or just like reporting on how different apps perform in daily usage.
Ariel, thank you for the conversation. Thank you a lot. And to everyone listening or watching, like, subscribe, or follow both of us and share this episode with someone curious.